Hi, what's up, guys? Today we'll talk about driving strategy for 9.2% dividend then crash crypto. Okay, let's start. These days, it seems like every investor is chasing that one big thing that will make them rich. They never stop technology, fat, or whatever. We contrarian dividend investors know these folks well. You probably have tried this or family members who chase it down, gain in crypto and 50 as profitless tech or heaven knows what else over the last few years. Heck, they may have even take a poke or two at you about your boring dividend stock and closed-end funds. Then 2022 came along, and while everything got his last year, we self investors had their last loud, as we called use or found sound present dividends to pay the bills, and we certainly didn't extend nothing like the declines the crypto clone suffered. You need probably nodding as your read alone, and to be fair, it is easy to be pulled into these types of investment, especially when we see some of the big profits early investors in crypto and meme stock made trouble is when the part ends, it ends quickly, and getting out in time to make a profit is largely a matter of luck. This is gambling, not investing. So, how do we avoid this trap? Well, the one thing to look for is whether the assets in question has real value. If you seek whether in line ignoring value, you'll end up falling off for a slow of scams and stick for shady people. How to be a raven? In light of that, I suggest ignoring that and being what I like to call a raven investors. That stands for rationally asserting value and exempling numbers. Okay, maybe it's not perfect, but it's a simple way to remember what most important raven stick to logic and reason recline on the number and precise methodologies or to assess the value of all investment opportunities they see. In the long term, Rams win as the investment game not only has study after study shows that consistent long-term investment in high-quality assets provides reliable returns, but long-term investing also means not losing over 17% of your investment losses, like those are simply impossible, or at last, it's very hard to do if you invest like a raven. And isn't hard, you just have to follow chase your basic rules. Have a plan and goal and stick to them. What works for one investor doesn't work for another. Remember what you're investing for and what you need to get there. Investing isn't about getting the high score, isn't about getting the freedom to live the life you want. Data and facts are key. A lot of investments feel good. That doesn't mean they are good more than another investors who already own facts or feeling bit everyone else, but that also means you need to be open-minded and willing to change your strategy when data changes. For most people that hurts. The market's mood is never right or wrong. Emotion can be right or wrong. This can, however, be signals of what is going to happen in the short term. So don't ignore them, but don't let them close your gentleman another. Cash flow creates value, nothing else. If sometimes producer over distributes cash, it always has value. If it doesn't, it might have value for a short period of time, but like beans, babies, it will ultimately be worthless. Focus on producing cash if you want to go financial independence. That's last rule trips up a lot of people. Take for example Apple, APPL, and compare it to Bitcoin. The former producer a lot of cash, 90.8 billion in 2022, which was 5,000 more than the prior year and our 80,000 more than before the pandemic. Bitcoin, on the other hand, doesn't produce nothing. It isn't supposed to because it's a currency and currencies don't produce nothing. Apple's near 100 billion per year's cash flow is much better than Bitcoin's. $0 for infinity cash flow, so isn't no precise that Apple has been strategy going up after the Bitcoin Bible fully popped. And that doesn't mean just campaigns cash flow. Your cash flow matters too. If you need a sound present buyout on your investment to cover your expenses, you will never run out of money if your portfolio being young or sound present sticking with low yielding and fund to no yielding stocks. You have a much higher chance of running out of the money. Fortunately, there are the hundreds of COC hours that produce such a cash flow and more while investing in solid companies like Apple. Take for instance, one of my long-term favorites, the Library All Stars Equipment Fund USA, 9.9% young fund which has been a long-time Apple holder along with Microsoft, MSFAT, Amazon, AIM-Z1, Visa, and Alphabet, Google. This fund is a good replacement for your low young index found since its focus on large cap American films has been both a source of stability and strong profits for literally decades. If you chose USA's divided cash flow or Bitcoin zero cash flow, you secured an income stream for life. That's a fair sight better than false who are gambling in speculation and manipulation markets like crypto. The result for them will likely be the opposite of financial independence. Um, Michelle Foster is the lead research analyst for Corton's Outlook for more great income ideas. Click here for our latest report. Indistributable income 5 budget funds with steady 10 present divines. Okay, the last rule trips up a lot of people take for example Apple and company of Bitcoin. The former producer a lot of cash, 100 billion in 2022 with 7 prices more than April year and over 20% more than before the pandemic. Okay, that's all. Goodbye.